Thank you very much, David Tweedo, Europe editor, standing by for us in Berlin with reaction. So a good day for Europe, a good day for Germany, a good day for risk-on investors. Let's find out how you should be positioning your money given the latest news that we have. Yianos Kontopoulos is the Chief Investment Officer at Eurobank. He joins us now. This presumably will only encourage the sort of the risk-on, the move into the peripherals that we've seen, the bid on the euro. All of those trends seem to be firmly intact.
Yes. I think it basically raises the incentive for people to start catching up, because this has been a year that most people have made a couple of mistakes. They misinterpreted the fact that you have a lot of known unknowns as really affecting the path of the markets. And they've also misinterpreted economic news and their importance, again, on their effect on the market. So they have to start catching up on both, meaning that the known unknowns have been just a lot of noise so far, and secondarily has not been about the economy, but rather about policy. So the latest news that we've gotten reinforce the realization of that mistake, and now active managers have to catch up.
They're underweight Europe, they're underweight the periphery. How big a catch-up are we talking about?
Well, they were also underweight equities, so they have to do a catch-up that's going to be very significant. Think about it in terms of 2 or 3 months, it's at least. So I think it's not a question of, yes, we had significant moves. We are very close to technical levels that might be important here, even to the untrained eye. So people will get excited, and they will need to get going in a much more forceful way.
So real money is going to follow. You kind of felt that August was a bit of a short story. It was squeezing out the shorts. You saw it. The volumes were anemic. Now it's real money coming in and giving this even bigger boost.
Yes, I think they have to. They have to, and I think, and rightly so, because the market now has to trade against 2013, not against 2012. And that means that they need to actually position strategically, not just tactically.
Does money flood out of bunds? Does money flood out of treasuries as a result of this?
One would say yes. In what sense? If, let's say, in 2 or 3 months from now, they haven't, there's something else going on that we haven't understood. So I think, it's been definitely, as you say, a good day for Germany, a good day for Europe, but it shouldn't be a good day for bunds.
No. Yeah. They kind of sit opposite each other. Let's just talk a little bit about the Fed. What do you think the Fed will deliver? How well positioned is the market for it? How much has already been priced in?
Okay, just a bit of context here. In general, if we look on the last, let's say, 5 years, the Fed has surprised the market, has overwhelmed the markets. Not in the past year, and the opposite has happened with the ECB. The ECB has typically preferred not to surprise the markets, but it has overwhelmed the markets in the course of the last year, every time it stepped in. So if we were just to follow that pattern, the Fed shouldn't do anything exciting. I actually do believe that they will. I'm not quite sure whether they're going to do it in September. I think the chance is pretty high, but they'll do it in a way that's going to probably put the markets in a further defensive stance. Meaning that if they make any reference to nominal growth targeting, which is a new idea that was brought up in Jackson Hole, or to a quasi-funding for lending scheme, similar to the one that we've had in the UK, just started on August 1st, then I think we're going to have really exciting developments on that front too. And if we take another step back, I think they have to. Why? We have the fiscal cliff issues that either going to be addressed, so it's going to be a 1% cost in 2013, or they're not going to be addressed, and they're going to be a 4% cost to growth. Either way, the Fed has to preemptively step in before that. Not for the sake of this presidency, but for the sake of the next presidency. So in my mind, we are shaping up for a surprise. The market is expecting something marginal at this stage, and I think good chance we're going to be surprised on the levels that I was...
Does the Fed also have to move in, as much as we're now starting to see the rating agencies warning about what the ultimate implication of the fiscal cliff will be? The importance of that event is becoming increasingly clear to the market, and I'm assuming by extension to the Fed.
I think the bite out of the rating agencies is just a little bit less than it was a year ago. It certainly sets the stage. It focuses the minds of the legislators in the U.S., but it's not the one it's one of those known unknowns by now.
Rumsfeld's got a lot to answer for. Yianos, thank you very much indeed. Yianos Kontopoulos joining us from Eurobank. Now, still to come, Angela Merkel says...